What's up, guys? What is up? Today we're going to be going over PDI, the pre-distribution inversion strategy. All right, thank you. So, obviously, if you're in this Discord, you know what the strategy is, or have heard of it, or have seen me alert it one way or another. So, yeah, it's become extremely prominent in my everyday trading day. So, I'm going to go over just essentially answering the basic questions like what does it look like? When do you enter? What is the most optimal entry, right? Like there's gonna be S tier entries compared to like A tier, B tier entries. What times to take it, and yeah, all that stuff. Even where does it root from, right? Like it all comes from the AMD model. So let's go over it. Let's start off at the most surface level thing here. So the pre-distribution inversion strategy all roots from the AMD model. What is AMD? AMD is going to be accumulation, manip- manipulation, distribution, right? So price moves in three ways. It accumulates. This is going to be your accumulation zone. It is going to also manipulate, which is right here. This is what's going to bait the sellers out. In this case, right, since we were talking about a bullish AMD, so there's going to be your manipulation right here, and then it is going to distribution. And this is just a very natural way that price moves. It's just like nothing crazy. Most people have heard of the AMD, like just AMD in general. It's one of the few things like people usually learn, um, especially when they're getting into ICT concepts. So as you can see right here, this is going to be your accumulation zone. This is the same thing as saying that price is consolidating, right? Usually not a lot of volume. We just keep generating some sort of, you know, low resistance liquidity or buy side levels to take out or sell side, whatever. Point is, we're generating a lot of liquidity. And so after we do that, price is gonna volume is gonna kick in, and price is gonna manipulate people, which is gonna be your manipulation leg, right? So you break out of this consolidation, this accumulation zone, and you're gonna manipulate. In this case, we're talking about a bullish AMD, so our manipulation is gonna be down, right? All of a sudden, we see price break out of this range that we're stuck trading in, and we break out, and now people are thinking, oh fuck, I need a short, I need a short, I need a short, because they're FOMOing into these shorts, right? Off this break. Um, and that's where price gets you. It's manipulating out all these sellers right here, and it's preparing to distribute up for the buyers. So this is going to be your distribution leg, right? So now here I have both the bullish and the bearish AMD model laid out, really in the most simple form. As you can see here, once again in the bullish AMD, we accumulate, manipulate downwards, and then we distribute up. The bearish AMD, accumulate, manipulate up, and then distribute down. And so the reason this is so important, obviously understanding AMD, is because the strategy PDI allows you to catch the distribution leg bullish or bearish. And so you can catch an entry at almost essentially the beginning really of the distribution leg. Um, so yeah. So now I'm going to go over what PDI looks like. So now let's go over pre-distribution inversion, PDI, and just show you how it's interlinked with the AMD model, right? So when we're looking for a PDI entry, or pre-distribution inversion entry, first step, it really is going to be finding the accumulation zone. In this case, right, we identify there's an accumulation zone right here. Price manipulates up, and in the process of price manipulating up here, there's one thing we want to look for, and that's the creation of a fair value gap within this leg, within the manipulation leg up, right? So in this case, we'd ideally have a bullish fair value gap. And now all we want to do is wait for price to invalidate this fair value gap, this bullish fair value gap, also known as inversing the fair value gap and creating an inverse fair value gap. And then we would enter off the inversion and be able to catch the distribution leg down. So how do you know if it's a good entry or not? Well, ideally, the most optimal entry in the PDI strategy is going to be when there's one fair value gap really in the leg. If you get like a 1 minute fair value gap, essentially this manipulation candle is one strong candle. You manage to create a, in this case, a bullish fair value gap. Price cleanly inverses it, and you can just market order your entry. But what's going to happen sometimes is that in the process of this manipulation leg, you're going to create multiple bullish fair value gaps in this case, right? So what do you do when you have multiple fair value gaps in this leg? Well, there's two things. You're going to, one, look to see if you instead have a singular fair value gap in a higher time frame, right? So let's say you have 2 in the 1 minute. Now check if you have just 1 in the 2 minute, because if you have 1 in the 2 minute, just one bullish fair value gap on the 2 minute, then all you have to do now is wait for the 2 minute to inverse it, and then you can take your entry, and you would, once again, catch this distribution leg. And so if that's not the case, where you don't have, let's say, a singular fair value gap on a higher time frame that's not the 1 minute, and you're just left with those like a multitude of 1 minute fair value gaps, right? You have one right here, one right here, one right here. Now all that's going to change is that rather than you taking your entry off of the first inversion, now what's going to change is that instead of you taking your entry off just like an inversion of one of these fair value gaps, you're going to have to wait for all these fair value gaps to get inversed, and then you would enter. Or ideally, you would wait for price to tap back into one of these inversions and then enter. But you do want to wait for this whole leg to become invalidated and create, inverse fair value gaps. And then you would take your entry. Let's go over this one more time, right? We accumulate. Price manipulates up. What happens in the process of us manipulating up right here? We create a bullish fair value gap. Now what do we wait for? An inversion of this fair value gap. We get a clean inverse. What can we do? We can enter right here and start targeting our targets. Now let's go over something important. If you are bearish, then this, if you have a 1-to-1 at the sweep of the accumulation zone, then you would take a partial at the bottom of this zone and then leave runners to the rest of any sell side that you have generated that you can target. If you are not bearish, you can still take this model because price naturally is going to move in these little AMDs, but you need to make sure that you are full closing at the sweep of the accumulation zone, right? So if you are not bearish and you are bullish, but you see this AMD model form and you get the pre-distribution inversion and you get a good entry, you're gonna have to full close at the bottom of the accumulation zone if you really want to see like how powerful the win rate is. And so that's essentially it, right? You enter, you manage to catch this move, you're gonna get the sweep of this accumulation zone. Chances are you'll keep running down if you're bearish, and if you're bullish, most likely what will happen is that price will come down, take this accumulation zone, and then do whatever it has to do. But you are still able to catch this move right here, which is great. Now let's go over what it would look like if we were bullish, right? So we're accumulating, and suddenly we get this manipulation down. What happens in the process of us manipulating down? We're gonna create a bearish fair value gap, ideally one, but like we said, there's a chance there could be multiple of them. And so what do? You wait for two things. You either find the highest time frame one to inverse, or you wait till all of the fair value gaps in the 1 minute are inversed, and then you can enter. In this case, let's just assume we have one. What are we gonna do? We're gonna wait for price to inverse / invalidate this fair value gap, creating an inverse fair value gap. We're gonna enter right here. Let's say we are bullish. So if we are bullish, our first target is simply gonna be right here. If we get a 1-to-1, then we can take a partial here. If not, we're gonna have to just move to break even and then target any other levels of buy side that we have, right? But yeah, you would enter right here off this inversion, and these would be your TPs, right? So it's super simple. It's really a no-brainer strategy. This is going to be a pre-distribution inversion in a bullish sense. And this is essentially allowing you to catch this entire distribution leg before it happens. I'm going to recap all of last week, right? I'm just going to do last week. And we're going to go over each day, and I'm going to show you how you spot them and, you know, when they happened last week. And so that way, when you're going into this following week, you can be looking for the same things and hopefully catch them as well. So let's start off with last week's Monday, right? This is Monday. We'll hop into the 1 hour. Let's go to 9 a.m. New York session open. We'll hop into the 1 minute. Okay. It looks like right off rip, we can start identifying that we have some sort of PDI model appearing. So yeah, let's get right into it. You wake up, New York session open. You wake up, New York session opens. Immediately, price starts consolidating. Sick. We don't mind. Why? Because we know we're going to get a manipulation. But let's look at our higher time frame bias now, right? So on the higher time frame, we want to determine our bias. And so let's start marking out some things that we start to take notice. Immediately, we notice that we are inside this bearish fair value gap in the 1 hour. Price seems to be respecting it. Looks good. As well as we have this opening gap down here, which is usually a really good indicator. Like if you have an opening gap, in this case, it's like below us, that we are bearish. Price almost always fills these opening gaps. So just by looking at this, I can also see that price doesn't look like it necessarily wants to go higher, right? It just keeps rejecting these levels up here, takes out these highs, rejects, and we're probably going to do the same thing here, right? We take out this high, we're probably going to reject and go down and fill this opening gap. So let's go back to the 1 minute. All right, so back at the 1 minute, we have this accumulation zone right here. We have this manipulation right here. I don't know why it's red, doesn't matter. And so we see that, at least just by looking at it immediately, we have this bearish fair value gap right here that we can inverse on the 1 minute. But let's make sure that, you know, that is the highest time frame fair value gap. And so just looking at other time frames, on the 2 minute, we have one as well. 3 minute, we have one as well. And yeah, so our highest time frame is going to be the 3 minute, right? So once we see an inversion of this 3 minute bearish fair value gap, we can enter. So obviously, we see that price inverses this 3 minute. We tap back into this 3 minute inversion right here. So considering that this inversion, this candle inverses 3 minutes so far ahead, obviously you're not going to market order down here because you're not going to get good risk to reward. It doesn't make sense. You're going to get bad RR. So in the case where the inversion happens so aggressively that you can't get a nice entry, just like, you know, a couple takes ahead of the inversion or whatever, when the inversion happens this aggressively, you want to wait for price to tap back in, right? So in this case, and this usually happens when it's anything above like a 2 minute fair value gap. So in this case, we have the 3 minute inversion happens, price retraces into this 3 minute inversion. Let's say we set a limit right inside the 3 minute inversion. So our first partial is going to be here at the bottom of this accumulation zone because we have the right risk to reward to be able to partial here rather than just break evening. And then we're going to leave runners to other levels, right? And we also have this opening gap right here all the way at the bottom, right? That's if you were to even have a fucking runner left by then. But anyways, this would be a pretty fucking fat trade. And yeah, you tap back into the 3 minute. This is kind of hard to spot, right? Because it all happens so fast. You have the 3 minute inversion right here. Immediately after the 3 minute inversion, price comes up and taps this 3 minute inversion, and then you would enter off that. So you really need to be fucking quick on your feet with this model. And I mean, we can watch this shit play out. First partial right there, move stop to break even. Price keeps running lower, ends up filling the opening gap. So let's go over this again, right? We have our accumulation zone right here, our manipulation right here, and we have our 3 minute inversion right here. And so now, just generally speaking, accumulation, and then pre-distribution inversion. And we have a pre-distribution inversion right here on the 3 minute, right? So we get this 3-minute inverse, price taps back into it, we short, able to catch this whole distribution leg. Beautiful. Plays out absolutely beautiful on Monday. Sweet. We'll keep looking for another PDI model here. It's still the same day because, you know, it's still not 11. And what seems to happen here is, so still in the same day, we're looking at about 10:30 a.m. now. We dump really fucking aggressively, fill this opening gap, but we start accumulating again, and out of nowhere we get a manipulation right here out of this accumulation zone. We can't identify any fair value gaps in the 1 minute. We switch to the 2 minute. We do see that we actually have 1 2 minute fair value gap right here. Okay, sweet. We have this bullish 2 minute fair value gap, right? Oh, sorry. We have this bullish 2 minute fair value gap. We do get an inversion, a really clean inversion of it right there. And fuck, you could have taken this as well. In this case, you wouldn't necessarily want to be more bearish though, because we did fill the opening gap. You'd definitely be leaning towards bullish at this point. But like I said, you can take this model whenever, except that in this case, we're only going to target the accumulation zone. We're going to close at the bottom of this accumulation zone, right? We're not going to hold any longer. But price allows us to do that, right? So we enter off this 2 minute inversion right here, super clean. Price delivers down. We take the bottom of this accumulation zone. Sweet. We get like about a 1-to-1, a little bigger. And yeah, so we didn't expect price to keep dumping after, you know, hitting the opening gap, but it did. And so now we can really be anticipating a strong reversal, probably that's going to happen at 11, since it didn't happen from 10 to 11, right? We just had this huge dump and created more generated buy side. So now we have this buy side level up here that we can target if we were to catch a reversal, as well as these equal highs right here. Fucking beautiful. We love equal highs. And yeah, so now we can go back to looking for some longs, right? Because we didn't get any reversal yet after filling the opening gap. And so we're waiting. We generate more buy side levels once again, equal highs again. So now we're really just fucking stacking up our targets for when longs happen. Price is accumulating. Boom. Price breaks out of this accumulation that's happening at 11. We manipulate down right here. We create the most idealistic fucking bearish fair value gaps inverse on the 1 minute. And we inverse it right here. We are very bullish. We can take a 1-to-1. We can take a 1-to-1 right here. We're going to leave another runner towards here. We could even partial right here again. And look at that. More fucking equal highs up here. And I mean, if you have more if you still have more cons available really to take off, that's impressive. But let's just assume this is your last target, right? And so look at how powerful this model is. Price inverses this fair value gap right here. We get this inverse fair value gap. We enter right here. Why? Because we accumulated, manipulated down, and now what do we prompt for? A PDI, the pre-distribution model. Sick. That. And yeah, now what we can expect is price to just fucking distribute all the way up. And that is quite literally what happens. So yeah, this was fucking crazy. Insane. Absolutely insane trade. So this was all on Monday. Now, let's look at the next trading day. So we were on Monday. We'll skip forward a day. Now it's Tuesday. Let's hop into the 1 hour. And go New York session open. Just looking at the hourly already, I'm feeling incredibly fucking bullish. We're inside this buy model, plenty of levels to target. We have this buy side level next to target. We have another buy side level up here. We have this level as well. And so we're just stacked with bullish targets, right? We see that price inverses this bearish fair value gap. We also see that we're holding this bullish fair value gap. So we have plenty of bullish confluences. No reason to be bearish. So if we do catch a PDI model that's bullish, we can leave runners. And so let's just see what happens with price here. Looks like we keep running up, right? Our bullish bias is certainly correct. But so far, I can't really find anything to enter off of. Now, from what I remember, we are inside this hourly bearish fair value gap. Price rejects it. However, we can't really take any shorts because we don't have generated sell side to target really. We just keep fucking run up. Doesn't really allow us to catch any sort of inversions because there's so many fair value gaps in this leg, so it's just not viable. So we keep waiting. We keep waiting for price to clean up. Now we start rebalancing this leg right here, right? I see that now we're trading within the discount of this range. Maybe we can find some longs. We'd start generating levels of buy side that we can target if we want to take longs. We have both these highs right here to target, and as well as we are inside of a bullish 15-minute fair value gap. So we're holding that bullish 15-minute fair value gap. Longs don't look too bad. We are bullish in general, but we are seeing rejection off this 1 hourly bearish fair value gap. But I'm not opposed to looking for some longs. We also have this accumulation zone right here, right? Price aggressively manipulates downwards. We break out of that consolidation range. I want to give it a different color. So we have our accumulation zone right here. We have our manipulation right here. And now, in the process of manipulating down, we set up this bearish fair value gap to inverse. So in the process of us manipulating out of this little accumulation zone, we create this bearish fair value gap, but as you can see, since we don't inverse it immediately, we end up creating more fair value gaps in the leg. In this case, we have a 4-minute, I guess we have this 4-minute fair value gap, which we want to see get inversed. And so what happens is we end up inversing the 1 minute, right? We get an inversion of the 1 minute fair value gap, but we couldn't quite catch an entry on this 4 minute. And the reason I wanted to wait for the 4 minute was because it was the highest time frame within that leg, and I wanted to play it safe because price had continued to run up higher. And despite me still feeling bullish in the within this general range, we are so deep into the premium that I didn't want to be I didn't necessarily want to be taking longs, but if I saw something clean enough, I would take it. So in my mind, this 4 minute was the cleanest thing that could happen. Despite this 1 minute looking really good, I wanted to see the 4 minute get inversed, and then I would have taken my entry. But unfortunately, what happened is that after we got the inversion of this 1 minute right here for the PDI, for the pre-distribution inversion, price just runs through all these highs. And so I know a couple people took it off the 1 minute because they felt that the draw was clear enough. I wanted to wait for the 4 minute, but as you can see, the 4 minute did not prompt any entries because in the process of this 4 minute candle inversing this fair value gap right here, it also took out these highs. So I'm not going to fucking enter on the 4 minute right here after it took out the accumulation zone highs. But anyways, you see that little AMD play out perfectly. And that pretty much sums it up for Tuesday. And now we can move on to the next day. So this is what price would have looked like if we got on the charts, right? For New York session open, we see a beautiful sweep of Asian highs. Price rejects it. Definitely leaning towards bearish here, right? We've made such a huge move up that we can probably expect some sort of retracement at this point. Since we are so deep into this premium, we probably want to see us, rebalance this range somewhat. So I think if I was going into this morning, I'd probably be pretty fucking bearish. We even have these equal lows on the hourly right here as well. So that could be like a final runner target if you were to take some shorts. But let's see. Price looks really shitty from just looking at it naturally. But hey, look. Okay, so 10 a.m. 10 a.m. happens. And we start accumulating right here. Be careful with these candles where you get a wick down like this, but you're still trading within this accumulation zone. Don't be fooled that this is the manipulation move right here, because most of the time it's not. If you just wick out of this range kind of, but like still stay within it, don't assume that's the manipulation, right? You see all these candles closing within this range, just assume that this is going to be our accumulation zone. And now we do start seeing some manipulation up. We are bearish in general. We are inside, let's see, we are inside some bearish PD rays as well, such as this 3-minute bearish fair value gap. So just looking at price right here, I can expect that this could be this is most likely going to be a manipulation move up, and we're just going to distribute down. Since we did have those bearish confluences, right? We want to see a rebalance of the higher time frame range. And so we can start marking out right here. This is gonna this is gonna be our accumulation zone. This is gonna be our manipulation. And now we want to wait for an inversion to happen. And so by the looks of it, we have this 1 minute. Let's see if we have any higher time frames. We do. We have a 2 minute. So this 2 minute bullish fair value gap is going to be the one we want to see get inverse if we are going to catch this pre-distribution inversion. And so looks like we do get an inversion of this 2 minute. This doesn't look like the worst entry really if you want to market order this. But it is pretty sketchy. So, I mean, me personally, really, I probably wouldn't take this. Why? Because we inverse the 2 minutes so aggressively, so far ahead, that we're already kind of close to our first target, which is going to be this low. But I guess theoretically, you could take it and just break even at this low if you wanted to play it safe. But you definitely wouldn't take a partial here because that's just negative RR. But anyways, we do get our pre-distribution inversion, so we can mark out this PDI right here of this inversion, and we can mark out our targets. Right, so we have the bottom of this accumulation zone. We target mark out some other targets right here. And yeah, I guess price just runs through those. You probably would have moved to break even right here and then gotten break even really. So not really the best trade, but whatever. Anyways, at least you do see though that you have this accumulation, you have the manipulation up, you create a fair value gap that's inversible really. On the 2 minute inverses it, and you have the PDI play out. And now you can see what's happening with the distribution leg. Right, so if I'm waking up on Friday, this is what I'm seeing. Sweet. Almost immediately my brain goes towards bullish, holding this bullish fair value gap. I see us keep taking these lows, respecting it. We have relatively equal highs up here. Sweet. Great fucking target if we are going to be bullish. Respecting this hourly. This looks really good. I'm definitely going to go into this morning and feel pretty bullish. Let's drop into our lower time frames. Let's see. So where's New York session open? Sweet. So just literally off rip. I mean, it's obviously easier to say this now that I can see it happen, but it looks like Pre-market, we're accumulating right here. New York session opens, we manipulate downwards, and what happens in the process of manipulating down? We create a fair value gap to inverse. I can see that we have this 1 minute bearish fair value gap right here. Is that our highest time frame? It is going to be our highest time frame. Wow. So the second we see price inverse this, that would be the pre-distribution inversion. And since we are bullish, we can anticipate that the rest of these are going to be our targets. So theoretically here, once this 1 minute gets inverse, which it does, you can go in for some longs. And in this case, right, this inversion is so clean that I probably would take this if I saw it and just break even after the sweep of the accumulation zone, which doesn't look that bad. Our stop loss doesn't even have to be down here because the inversion happens right here. So we can just put it about right here, because we can assume that if price were to come down and invalidate this inversion, we're probably just going to run lower. So we can be, even putting your stop loss here is pretty safe. Enough room for price to hold this inversion if we come back down into it. You have your first level of buy side right here. I would break even right there if that was me taking that trade. We have a level of buy side to take right here. We have, you know, more levels of buy side right here. We have this high right here and those relatively equal highs on the hourly PDI right there. Pre-distribution inversion. We get that inversion. Immediately after, look what happens immediately after the inversion. You get that inversion, just run up. You'd probably get break even right here, most definitely. I would have 100% taken a partial around here, gotten break evened. But we can probably still expect these highs to get taken up there. And yeah, they eventually do. But this would have been a good trade. Why didn't I take this on Friday? I did not take this because we had news at 10. Turns out news didn't fucking do shit, and it was just, it was unfortunate. I probably should have waken up for 9:30. I mean, not waking up. I probably should have been trading at this time, but I wasn't. And it's fine. So it looks like we just end up getting stuck trading within this range. We accumulate for a fucking fat minute, and eventually we start manipulating out. This isn't too convincing of a manipulation though. We do have these equal lows though right here, making some sort of PDI model here much stronger than what it already is. And we are right. We see ourselves get stuck trading within this range. Eventually, we do get a more convincing manipulation move because we have this fair value gap right here, this bullish fair value gap. We create a fair value gap in the process of manipulating up. Up here is going to be our manipulation. Right here is going to be our manipulation. We find the highest time frame fair value gap. In this case, it's 2 minute. And so we can obviously see that price is respecting this 2 minute fair value gap, which we create in the process of the manipulation leg. And so that to me tells me, okay, we see price respect this 2 minute multiple times. If we get an inversion of this 2 minute, chances are that price is going to run down lower very aggressively, right? And so we wait, right? We have our accumulation zone right here. Our PDI is going to happen right there. Before we go into this trade, let's determine a bias to see whether we want to leave runners or not, or just full close at the accumulation zone. In this case, we see that price ended up respecting this bullish fair value gap. We run higher. We close way above these equal highs, these relatively equal highs. It looks like we're delivering up with, you know, good buying power. So going into this trade, I want to be more lenient towards bullish. And considering that we are going to be taking a bearish PDI model, I'm most likely going to full close at the bottom of the accumulation zone. So going into the trade, obviously I'm not necessarily leaning bearish. So if I am going to take this, I want to make sure I full close at the bottom of the accumulation zone, and I'm not greedy. So right here would be your entry at this candle close, and you'd go in. Okay. Nice candle. You'd full close right here. And yeah, I did end up taking this. I alerted what I was thinking before this. We had this 15-minute fair value gap that I wanted to see get rebalanced this day. Those 15 minutes are a good target, but we didn't end up rebalancing it. So I did for the most part. I took a partial around here, and then I ended up getting break even, which is whatever. But yeah, so obviously now you guys have seen how powerful this model is, even in play in like live price action. This was me going over last week, all the times where you could have spotted it, right? Sometimes you're gonna miss it, but that's why I'm going over the week with you now and showing you, times where I'm showing you times where it played out. So let's go back to the fucking drawing board real quick, and let's go over really when this model is most powerful and when it is less powerful. So something like this would be incredibly ideal if you are looking for a bearish PDI where you have your accumulation zone, and at the bottom of the accumulation zone you have some equal lows resting down there, and when you do manipulate up, you have an inverse fair value gap somewhere near the peak of this manipulation, so you have the best risk to reward, and you can at least 1-to-1 at the bottom of this accumulation zone. And then leave runners, of course, if your bias is in line with the model. This would be probably the most S tier setup you can see. Even more so if this is all in the 1 minute, right? This would work incredibly well, just like algorithmically. Right, same goes for the bullish version of the PDI model. You have some sort of equal highs maybe resting at the top of this accumulation zone. You're able to get a 1-to-1 and partial at the accumulation zone, right? That's meaning your entry of this inversion is near the manipulation leg, near the bottom in this case of the manipulation leg. And so this is giving you the best risk to reward, and you can leave runners, swords, whatever other targets you have if your bias is in line, like I've said a million times. This is a list. So this is a list of when you would not take this strategy, and it's when the inversion closes too far from the ideal entry, right? That means that, let's say we are accumulating and we get our manipulation down here, but then our inversion happens fucking right here, which is like one tick away from the top of our accumulation zone. You don't want to take that. That's horrible risk to reward. I mean, you wouldn't want to do that. When time doesn't align, right? If you are wrapping up like number two, when time doesn't align, right? That being like, let's say you see a PDI model start to happen at like 1:55 and 2 p.m. is about to open. Don't take it. Chances are you're going to get manipulated out by 2 p.m. It's not ideal. Also, I don't like to take it really past from 11 to 1 p.m. Price is just not as clean normally. Only time I will take it at 11 is if 10 a.m. is all just generated liquidity that never gets taken, and so it usually leaves it for 11. Also, don't take it against equal highs or equal lows. That's fucking stupid. You hear us say this all the time. You hear us say this all the time. Another time you don't take it is when you're respecting an opposing PD array, and by that I mean let's say you want to take a bearish PDI, but you are inside of a bullish 15-minute fair value gap. Don't take it. It's very easy to get manipulated out once again, right? Be smart when you take it. Here's just me reiterating the other point I was making before. This is what your trade would look like if your higher time frame bias does not align. You would full close at the accumulation zone. This is what your trade would look like if the higher time frame bias does align. You would leave runners. You would only TP1 at the accumulation zone and then continue to leave runners so you can really catch that distribution leg. Anyways, I'm going to leave it at that for this video. I will go more in depth in other videos. We will do back testing sessions together using this strategy, of course. So, be on the lookout for that. But yeah, this strategy is just fucking insane. It's been working like crazy, right? It's almost a combination of algorithm with like pattern almost, right? Because like AMD is just such a natural way that price moves, and then when you combine it with like some sort of ICT algorithmic shit, it's fucking insane, and it just works so fucking well, and it is very easy to understand. So yeah, just make sure you're taking this. This shouldn't be a model where it's like hard to find. When it is clear, it is clear. When it is not, it is not. Just I guess, focus on taking it when it is very prominent, when it is very obvious what is happening. And yeah, love you guys, man. Good game.